What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least $100 in that brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. With that $100, man, you're going to be able to start buying your favorite companies, your favorite ETFs, and start building your wealth. There's a link down in the description box of the video. Go click on that Webull link. Open up that new Webull account today. Go get that free stock. Go get that free money. I'm going to send you a free tutorial video walking you through how to use the Webull app to start buying your favorite investments. All you got to do is send me a screenshot of your new Webull account, and you can send it to my Instagram account at RichardFane28. Just shoot me a DM with the screenshot, and I'm gonna send you that free Webull tutorial video to walk you through how to use the Webull app to start making your investments to build wealth. Fed funds rate, 5.5%. A year ago, the Fed funds rate was 1.75%. It just signals that the Fed believes inflation is still too high. Here's the good news. It has come down quite a bit. So them increasing those short-term interest rates has helped bring inflation down. Now, some of you might say, well, hey, how does the Fed raising interest rates bring inflation down? Well, when you increase interest rates, what you do is you limit the supply of available funds, right? So when I raise interest rates, that makes borrowing money very expensive. And when you make money very expensive to borrow, people don't borrow it. Companies don't borrow it. Therefore, you take out some of the available money supply out of our economy, which does what? Bring prices down, right? If people don't have money to spend, prices come down. Prices go up when people have money to spend and they start spending it, and we don't have enough supply to keep up with the demand. That's inflation. And the Fed raising short-term interest rates, they just take some of that potential or available funds out of our economy. So yes, 5.5% is the Fed funds rate currently. And the Fed just increased that rate to 5.5 yesterday, Wednesday, July 26. You guys know I've been on the record saying 2024, 2025, we got a new bull market start. And I still stand by that. I think by the end of 2023, the Fed will be ready. They'll be ready to start decreasing short-term interest rates. Why? Because I think by that time we'll have core inflation somewhere in that 2.5% to 3.5% range. And I think that'll be good enough for the Fed to start slightly in 2024 reducing the Fed funds rate, aka short-term interest rates. So why is the stock market doing as well as it's doing if interest rates are high? And typically the stock market is low when interest rates are high. Our economy, despite interest rates being high, the economy is still doing pretty dang on well, right? Q1 2023 GDP numbers came in at 2%. So that means our economy year over year grew by 2%. That is pretty dang on good. So with an economy still growing, even with interest rates at 5.5%, that tells me we got some pretty good things going on in our economy. One of those things is a red hot labor market. Even though it has cooled down a little bit over the last 6 months, it's still pretty red hot, guys. So people are still able to get jobs. They're getting wage increases on those jobs. So again, anytime you add money or make money available, the supply of money available, people typically will spend it. You also have it available through equity in people's homes, right? From 2020 to 2022, on average, people who own their own homes saw a 40% increase in equity because of the pandemic real estate boom. It increases the supply of available funds that people can tap into to buy things. So the economy is still plugging right along and doing okay, despite interest rates high. So what happens is the market says, hey, maybe we're not going to go into a recession. Hey, let's dive back on in and start buying our favorite investments again. And that's what's happening. So at the beginning of 2023, there are a lot of people out there said that the S&P 500 wouldn't get any higher than 3,400 points this year. Guess where the S&P 500 is at today? 4,500 points. There you go. And the reason it's 4,500 points is because of just what I just said. Because investors do not believe we're going to go into a recession. They believe we're going to have a soft landing. And I believe the same thing. So that's why I am putting my money where my mouth is, which is dollar cost averaging in every single month, putting my money into my favorite investments, specifically S&P 500 ETF that tracks the S&P 500 index. I keep telling you guys, for 99% of us, that's the only investment we need. We got the top 500 companies in America in it. And history tells us the last 90 years, if you go back and look at the numbers on the S&P 500 over the last 90 years, 7 to 10% rate of return. And guess what it's doing year to date? 2023 year to date. Almost 20% ROI, guys. That's the S&P 500 index. So if you have an ETF that's tracking that, guess what your ETF should have for ROI year to date? 20%. Let's keep this thing simple. We don't have to make it hard. Just dollar cost average into an S&P 500 ETF or index fund and you're good to go. Why don't most people do that? Well, most people don't have discipline. They're not consistent, and they're not patient. See, we live in a society where people want stuff right now. They don't want to wait 5 years. They want it all right now. So what do? They go out and look for opportunities that's going to give it to them right now. And what does that do to them? It opens them up to scammers and people that take advantage of them. Because number one, they already have a lack of financial literacy. And then all of a sudden, they got no patience, no discipline, no consistency. So they're prime targets for scammers. Oh, I'm going to give you a 300% rate of return and you're going to get it in month one. I'm going to show you how to trade so you can make $2,000 a month right off the bat. All you got to do is send me $1,000. Send me $1,500. That's what happens. Curious to know what you guys think about the Fed decision to increase short-term interest rates by 25 basis points and the likelihood of them increasing it again in their September meeting. Now, we got some data that'll be coming in. We got the CPI inflation report that we'll have for July and August to see how inflation is doing. And that data is going to really determine, I believe, if the Fed raises interest rates again in September. So let's keep an eye out for those two reports. But drop me some comments down in the comment box and let me know what you think about the Fed raising interest rates by 25 basis points to 5.5%. And what are you going to be doing to take advantage of this opportunity we have in front of us to build wealth? We still got investments that are on sale. We're purchasing the S&P 500, not because it's at 4,500 points today, because we believe at some point, hopefully it'll get to 5,500 points. And that's where we make our net worth, right? That's where our net worth grows. If you want them 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. If you can see it in your mind, hold it in your hand. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.